I'm going to try to get this in one setting. I have this feeling that it's not going to quite work. We may have to do it in two. But this is what we went over in class. And these are the instructions. This is also found on page, it's exercise 20-24 and 25. And that's on page 904 in the textbook. So if you want to really get a good look at it, you can open up your book and look at exercise 24 and 25. And I'm sorry, it's on page 906. I was wrong. Imagine that. Anyway, this is what we're going to be playing with. What I did was print it off, so I've got the instruction sheet in front of me. So when you go, and we're going to make some budgets here. And let me get them all pulled in there for you. Let me make this a little easier to see, simply because we don't want all of this driving you nuts at one time. So we'll make that, cover it up, and I'll go through this step by step, and we'll pick a pretty color. How's that? So now we'll look at this, and it says we're going to make an income statement. We're going to make a balance sheet. And the first thing though we have to do is make a cash budget, so we know how much money we ended the period with. And the instruction sheet tells us $50,000, so that's where we start. We put in $50,000, and then we have to look at cash receipts. And this gets to be a little bit interesting because they layer it out 3 months. So cash receipts, I came over and I created a table for myself so that I could select what was owed when. Okay, so in May we collected $1,720,000. But only 30% of that was paid the first month, 50% the second month, and 20% the third month. So I just went ahead and multiplied those out. Did the same thing with June, and did the same thing with July. So now I'm looking at the end of July, and I'm saying, okay, what needs to be paid yet? Well, I'm 3 months out from here, so what is going to come in? So this 20% here should be part of my receipts. So I've got 20% from May, and if I go back and I look, I see that, okay, this is the second month for June, so I should get $600,000. And so that's my next entry. And finally for June, I'm getting 30% of the $1,400,000, which is $420,000. So those are my cash receipts. That's what I'm going to receive money for. So if I add that to my beginning balance here, I end up with available cash of $1,414,000. So that starts my cash budget. Now what are my cash disbursements? Again, I had to do, because I'm paranoid that way, I did a table so that I don't have to keep thinking about this, that I can just look at it and see. And their explanation is they pay 60% in the first month, or 30 days out, and they pay 40% in the second month. In the month of purchase. I'm sorry, I got that wrong. So they pay 60% in the month of purchase and 40% the next month. And for June, they have the actual payout of $700,000, and for July, they had a budgeted $750,000. So these are their payouts in those months. Now we're looking at July, so that means I'm paying $280,000 from this June, and I'm paying $450,000 from July. So there we show $280,000 and $450,000. They tell us our salary payments are $275,000. That's just the money that came out. That doesn't include accrued payroll that they may have. But we're looking at a cash budget here. So then they give us the other expenses of $200,000, and they also give us accrued taxes, what we needed to pay, and finally interest on a bank loan, and they tell us what that is, $6,600. Those are all of the cash receipts and disbursements for the month of July. That gives us total disbursements of $1,291,600, and ultimately we end up with an ending cash balance of $122,400. Now you're going to need all of these numbers again, so just hang on to them and make sure you got them right. So now I can do the sales, right? Now I can do all of the sales. So we know what the sales were. That was a given. That was $1,400,000. So now I'm doing an income statement. And they tell us the cost of goods sold is 55% of sales. So we'll multiply that times the 1.4 million. And that gives us a gross right here of $630,000. I forgot to put in a line, and I didn't want to mess this all up right now. So we have a gross of $630,000. Now we're going to calculate other expenses, operating expenses. They tell us salaries. Now remember I said salaries was $275. That was cash, but it did not include any accrued payroll, which is payroll that we owed but didn't pay during that period. So to figure that out, I take my beginning payroll payable plus my ending, and what I do is I take the cash paid minus the beginning plus the ending payable, and that tells me how much we spent altogether on salaries. And there was a difference of $10,000, so instead of $275 in cash, we actually have $285 because $10,000 of that is in accounts in the salaries payable. So then we look at depreciation, and that's a given for us. They tell us $36,000. Other cash expenses they gave us at $200,000. And then the bank loan interest, that's an expense, right? That's $6,600. So we have total expenses aside from the cost of goods sold of $527,000. Is that right? Yeah. Yes. And now we have to figure out the income tax, and they give us that number. Our income tax is what's the number they give us? 30%. So income tax expense is 30%. We multiply that by the income before taxes. Come up with we owe $30,720. It gives us a net income of $71,680. Now we're at this. Now we got to remember this is all budgeted. This is not actual. This is a budgeted income statement from your cash budget, from your receipts, your disbursements, and other information they've given us. So that gives us a budgeted income statement. So that's pretty cool. Now we're going to look at the balance sheet. Your balance sheet's going to be pretty much the same way. We're going to pull information from these two other documents. So, what was my cash? My cash began at $122,400. That's out of my cash budget. My accounts receivable. Now this is kind of interesting. What's left to be paid? Okay, so what's left to be received? In my third month, we decided that we received this, and this, and this. That means this hasn't been paid yet, or these two have not been paid yet. So if we add those up, you come up with $1,220,000. Inventory, I believe they gave that to you. Inventory was somewhere in here they tell us your inventory at the end of June was $80,000, at the end of July was $60,000. So we have the inventory. That gives us total assets of $1,402,400. And then they talk about equipment. And equipment was $1.6 million. That was a given. But we had to calculate accumulated depreciation. It was $280,000, but we added $36,000 up here with the expense. So that gives us $316,000 of accumulated depreciation. And then that gives us a net value for our equipment over here. Now, that gives us total assets of $2,686,400. And then we figure our liabilities and equity. Again, our purchases, the only thing we owed yet at this time was 40% of what was left of $750,000. Because remember, they paid in the first month, they've paid the 60% right here. They've already paid that, so the only thing left, okay, they've charged this. They've paid 60% of that at $450,000, so there's $300,000 left in accounts payable. So then you have salaries payable. They told you what that was. The ending was $60,000. We know what our income taxes payable are. It's right here, $30,720. You move down, that gives us our current total liabilities. I have a cat attacking my mouse here, which is kind of interesting. And then we had the bank loan payable of $660,000, which give us a total of $1,050,720. And now we've got common stock. They give us that, and the retained earnings. In the instructions, they told us the beginning retained earnings was $967,000. Well, we have to add that $71,680 to that to come up with the retained earnings here. So now all we have to do is add this up, and it should match with our total assets. So we have total assets matching total liabilities and equity, and we have just created budgeted financial statements for this company with the cash budget, the budgeted income statement, and the budgeted balance sheet. So that's kind of really kind of nifty. So now we'll move on, and I'll take you a stroll through what will be your test question.